I'd love to tell you that I've had this all put together, but it's taken a minute to do that. And the thing that really shook me into action and changed my perspective was 2008. So in 2008, we all know what happened in 2008, but I had been investing in real estate since 1996, so 12 years. And, it was the natural progression of an investor. I started buying, fixing, and flipping little single-family homes, and then, started buying multifamilies and getting into development. And by the time 2008 came, I was building $23 million homes in Park City, Utah. There were 14,000 square foot ski and ski out, beautiful homes. And I had 3 of them coming to market in July of 2007. Had a big page spread in Ski Magazine, and this was going to be my final play. When all these houses sold, I was ready to retire. It was going to be fantastic. But we all know what happened. I was over leveraged. I was spread out too thin. I had leveraged my portfolio of real estate and used it to do private money lending, and everybody stopped paying their creditors, and it was just a big mess. And so what I realized through this is that there is a safer way to do it. And if we understand the rules of the game and we play by them, the market will reward us very favorably. So I want to start here with risk tolerance and understanding it. As I mentioned, our holding terms are short, okay? So 12 or 24 months is the length of our notes. And we are underwriting to a very conservative criteria, not exceeding 65% of the ARV, so the after repaired value. So we're staying low, and then when we exit, the investor who we lent the money to is fixing the property up and then selling it, or we're assisting them in refinancing it if they want to hold it as a long-term rental. Now, I'm not here today to talk to you about buying, fixing, or flipping single-family homes or residential 1 to 4 unit properties. That's not my goal here. Simply to help you understand how we create the opportunities that we then make available to you guys, either in our private equity funds or in buying the notes that we are originating. So we put together this slide as it relates to risk alignment, and we mentioned syndications, which, like I said, I've invested in them, I've sponsored them, I've GP'd them, and I think they're a great asset class. I have gold, I have rental properties. I had crypto, but in all transparency, I had to sell it because I was a nervous wreck. I was constantly checking the markets, and every time Bitcoin would go up, I'd be on this high, and every time it would go down, I'd be like, oh no, what's happening? Personally, I'm not sophisticated enough to understand the crypto space. So like Warren Buffett says, invest in what you know and hold what you understand. And so for me, that is residential single family 1 to 4 units. And so that's where we stick.